Hey traders, welcome back to the channel. It is Friday, January 30th. Hope you had a good day of trading today. I had a nice day. It was small gains because I traded just a handful of contracts, but I did manage to keep it very scalpy and get in on Intel about 3 minutes into the day, right after that initial big dropout. And then I rode the reversal up and closed the last one of my contracts right before it turned back around. So that was nice. I also traded SPY today. Nothing blockbuster, just a few $100, but a few $100 is a few $100. So, every win is a win. But let's get to the news. So what a wild way to end January. Wall Street just wrapped up its third straight down day as Trump's bombshell Fed chair nomination triggered an absolute bloodbath in precious metals. Silver's worst crash since 1980, and gold also got hammered today. Despite Friday's losses, the major indices still squeaked out gains for the month, which is nice. And get this, Apple crushed earnings with record-breaking numbers, but the stock still fell. Imagine that. You go back to any one of the numbers of these videos that I've made, news videos over the last 2 weeks, and you'll hear me say time after time after time, just because a stock crushes the numbers, that doesn't necessarily mean that it's going to trade up the next day. So you can no longer just look to earnings and say, oh, wow, they really beat earnings, I'm going long the very next morning. You got to just wait and see what you're looking at on the actual chart itself, not just the news of the earnings and stuff like that. So this is the kind of thing that happens when market psychology trumps fundamentals, basically. The S&P 500 dropped 0.43% to close at 6,939, marking its third straight losing session. The Nasdaq led the sell-off, tumbling 0.94% to 23,462 as tech stayed under pressure. The Dow did hold up better than the others, falling just 0.36% to close at 48,892. But here's the twist. Despite this week's weakness, all three indices still posted solid January gains on the month. The S&P was up 1.4%, Dow was up 1.7%, and the Nasdaq was up 1%. So back to this Fed chair shockwave that happened. As I said, Trump nominated Kevin Warsh as the next Fed chair to replace Jerome Powell when his term expires in May. The fact that Powell was on his way out was not news to anyone. Everybody already knew that. They just didn't know who would replace him. Turns out it's Kevin Warsh. This guy is a former Fed governor from 2006 to 2011 who served through the financial crisis. The markets viewed this as easing concerns about Fed independence because Warsh has some credibility and apparently won't just be Trump's puppet. Obviously that remains to be seen, but that's what it looks like on the surface right now. But here's the drama. Republican Senator Tom Tillis is blocking the confirmation until the DOJ's investigation into Powell is resolved. So this could actually get messy. The Warsh nomination triggered the most insane precious metals crash we've seen in decades. Silver absolutely collapsed 30%, its worst single-day plunge since March of 1980, settling at $78.53. Gold got hammered as well, dropping 9 to 11% to around $4,800 per ounce after hitting $5,500 just yesterday. So that was a huge drop in one day. This was pure forced selling as leveraged traders got margin calls. The dollar spiked on the news, crushing the currency debasement trade that had been driving metals to record highs. So Apple reported last night and absolutely crushed it. Record revenue of $143.8 billion, smashing the $138.5 billion estimate. iPhone sales exploded 23%, and get this, China revenue surged 38% to 25 billion, destroying the narrative that Huawei was killing Apple there. Services hit a record 30 billion, but the stock still fell 1.2% Friday because the bar was so high and investors were worried about rising component costs squeezing margins. So apparently sometimes you can do everything right and still lose, as we saw with Apple today. The big winner of the day was Verizon, which absolutely exploded higher, up somewhere between 6.6 to nearly 12%, depending on the source. New CEO Dan Schulman's turnaround seems to be working. The company crushed Q4 with 616,000 new phone subscribers versus the 420,500 that were expected, which is the strongest growth since 2019. The real kicker, 2026 earnings guidance of $4.90 to $4.95 per share destroyed the $4.76 estimate. So this is what good execution looks like. In an inflation surprise, announcing to Friday's pressure, December producer prices came in way hotter than expected. The PPI jumped 0.5% versus the 0.3% estimated, and core PPI surged 0.7%, which is more than double the 0.3% estimated. The annual rate is still trending down towards the Fed's 2% target, but this monthly spike shows inflation isn't dead yet. Beyond Apple and Verizon, earnings were all over the place. Chevron popped on a profit beat, but Exxon dipped slightly. American Express tanked 3.1% after missing earnings estimates. The market is clearly separating winners from losers, and specific execution matters more than ever. Here's how we're wrapping up January. Markets are down 3 straight days, but still posted a gain on the month. Kevin Warsh is heading to the Fed if he can get confirmed. Precious metals are experiencing their biggest crash in decades. Apple is proving doubters wrong with monster numbers, and Verizon is showing what a CEO shakeup can do. The crazy part, all this volatility, and we're still up for the month. So February will kick off Monday with a whole new set of catalysts. I hope you have a good weekend. That's the end of the report today. If you want to learn how to day trade stock options the way I do, I have a couple of courses available on my site. I'm really proud of them. I think they can really help newer traders. If you're trying to get into this game of options trading and you want to know where to start and you're not sure what a good strategy looks like or how to do this thing on a daily basis, just go to my site, Lone Wolf Trading Club, and take a look at my courses. And if you feel like getting some courses, I would greatly appreciate it. I think they will help you out considerably. And that's it for today. I'll be back here on Monday with another Market Movers Daily Report. So have a great weekend, everybody. Bye-bye.